Hello and welcome back to the Geordie Pig Investor channel, where we dive deep into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, I'll be going through my entire InvestEngine portfolio and show you all the different ETFs that I own within this one. I created this portfolio to show you all that you don't need to have millions of pounds to start investing, and by putting away something every single month will be beneficial over the long term. My portfolio is split between my general investing account, also known as the GIA, and also my individual saving account, also known as an ISA. The reason it is split is because before last year you could only hold one ISA account, which is my main portfolio over on Trading 212, but since then they have allowed you to open up as many ISA accounts as you want, the only caveat being between them you can't exceed the £20,000 yearly limit. So since this came into play from April, I have been investing £100 a month every single month into my ISA Factor ETF and Chill Pie, hence why I have built this position up to around about £1,100 since April last year. Eventually I will move the money across from my general investing account into my ISA account, but there's no rush for me to do so right now. If you didn't see my January update, I sold out with some of my ETFs as I felt I could get the job done with less complication. So if you want to know how I've adapted the portfolio, then please check out that video. I'm much happier with the ETFs I now own in my InvestEngine Stocks and Shares ISA. Now let's have a look and see how the portfolio performed in the month of February. So if we click on the overall portfolio here, you can see the all-time performance, it's plus 9%. But if we have a look at the last month, you can see that the portfolio is down just over 1% overall. In particular, the S&P 600 small cap has performed the worst, being down over 6% this month. This fund trades under the ticker symbol ISP6, and it is an exchange traded fund that aims to replicate the performance of the S&P Small Cap 600 index. This index comprises 600 small cap US companies, providing investors with exposure to this segment of the US equity market. I really like this holding within my portfolio because it gives me exposure to stocks I wouldn't otherwise have. Top 3 holdings within this stock are the BlackRock Liquidity Agency at 2.7%, Alaska Air Group at 0.6%, and Glaukos Corporation also at 0.6%. The sector breakdown, it actually has over 27% in industrial, and then it drops right down to under 10% in financial and 8.3% in consumer. If you're interested in this particular ETF, just be aware of the inherent volatility and liquidity characteristics of small cap stocks, as they can be more unpredictable and less liquid than larger company shares. As with any investment, it's essential to assess how this ETF aligns with an individual investment objective and risk tolerance. It's only 15% allocation in my portfolio, and I actually don't mind when my ETFs are down for the month, because it just means when I buy in for the following month, like I'm going to do today, and put my £100 in, it is actually at a cheaper price. The next stock that performed pretty badly in the month of February was the UBS Factor MSCI USA Quality ESG ETF, stock ticker UC99. This is an exchange traded fund designed to provide investors with exposure to US companies that exhibit high quality characteristics and adhere to environmental, social, and governance criteria. The fund aims to replicate the performance of the MSCI USA Quality ESG Low Carbon Select Index, which focuses on US companies demonstrating strong quality traits and robust ESG practices. This one has a very high concentration in the top 3 holdings, which are Nvidia at 8.55%, Apple sitting at 8.36%, and Microsoft at 8%. The sector allocation shows that it is massively weighted towards technology, with it having such high quality characteristics right now. So there's no surprise that over half the ETF at 52.07% is actually in technology. And then you have industrials at 14.23% and healthcare at 10.09%. I have this as my biggest allocation due to its very strong performance since inception. The fund has actually achieved an annual return of 18.09%, including dividends, which means it's outperformed the S&P 500 since its inception. Even just over the last year, the UC99 has delivered a total return of approximately 21.32%, And even with this dip in February, I have seen 11% returns overall on my position so far. If you're interested in the UC99 ETF, you should consider its focus on high-quality US companies with strong ESG practices, its sector concentration, and its performance since inception. Although remember that past performance is no guarantee of future result. The next stock in the portfolio that was in the negative was actually my X-Trackers MSCI World Quality. This is an exchange-traded fund designed to replicate the performance of the MSCI World Sector Neutral Quality Index. This index focuses on large and mid-cap companies from developed markets worldwide that exhibit high-quality characteristics such as high return on equity, stable year-over-year earnings growth, and low financial leverage. The top three holdings in this one are Apple at 5.38%, Microsoft at 5.26%, and Nvidia at 4.28%. These holdings are the same top three as UC99, but with smaller allocations, and this ETF isn't as heavy in tech overall. The top three holdings are actually industrial at the biggest, covering 20.9% of the portfolio. Then it's tech at 20.5%, and financials at 18.6%. I will also add that I don't mind stocks overlapping between these ETFs, as I know it's stocks that I'm very happy to end up holding more allocation in. This fund has delivered a 10-year annualized rate of return of 13.09%, and although down this month, overall I'm up over 10% in my position. And if you're interested in XDEQ, you should consider its focus on high-quality companies across developed markets, its sector and geographical diversification, and its accumulating dividend policy. As with this investment, it's essential to assess how the ETF aligns with your individual investment objectives and risk tolerances. The final two ETFs were actually in the green for the month of February, but due to having to pay an expense ratio when you own a stock, this has put both stocks slightly in the red for the month. First up, we have the Wisdom Tree Global Developed Quality Dividend Growth ETF. This index focuses on dividend-paying companies in developed markets that exhibit strong growth characteristics and high-quality fundamentals. The top three holdings within this one are Microsoft at 5.38%, Apple at 4.29%, and AbbVie at 2.5%. The fund has significant exposure to the United States at over 60%, but it does actually have Switzerland in at 6.6%, Japan at 5.58%, and France at 4.71%, highlighting that it is quite a diverse portfolio. This ETF is diversified across various sectors with notable allocations in technology at 24.08%, healthcare at 17.5%, and industrial at 15.63%. It has had a 14% return over the last 12 months, and I've seen a 10.5% return from my monthly buys into the stock. If you like the combination of income and growth potential through exposure to financially sound, dividend-growing companies across developed markets, then you may find GGRG to be a compelling addition to your portfolio. Finally, we have the MSCI World Momentum ETF trading under the ticker symbol XDEM. It is an exchange-traded fund designed to replicate the performance of the MSCI World Momentum Index. This index focuses on global, large and mid-cap companies exhibiting strong momentum characteristics. It actually has Meta as its top holding, sitting at 5.5%, then followed by Apple at 5% and Nvidia at 4%. This ETF is heavily focused on three sectors that share over 2/3 of the entire portfolio. These sectors being technology at 23.1%, you've got industrial at 22.3%, and financial at 22.1%. If you're interested in XDEM, then you should consider its focus on momentum investing, which targets stocks with strong recent performance trends. As with any investment, it's essential to assess if it does align with your investing goals though. I'm really happy with my different holdings within this portfolio and will continue to add to them with the allocations I have them assigned to. So without further ado, let's put my £100 in for the month. That is very simple to do. I will show you how to do that right now. You click on the fund, press invest, and then I will simply add it from my cash position. I want to add the amount that I'm going to put in for the month, which is that £100. I'm going to press the review order, and then that will be put through on Monday, with today actually being the 28th of February, but it is a Friday night, so the markets are closed over the weekend, so this means it'll go through at 2:30 p.m. on Monday. There we go, as simple as that. The order is submitted and that will go through. And you can see now overall we have £1,200 within the ISA account, being up 9%. And in my general investing account, I actually have the exact same stocks, but because we bought into these a little bit earlier on, before we were actually allowed to buy into a second ISA account like we did in April this year, we built up a position in here, so we have a 23% return rate in that particular investing account. So like I say, overall now the portfolio is well past that £2,000 mark, which is very exciting, and I hope this series shows that it doesn't matter how much money you're investing, the fact you're actually investing is a massive deal and will contribute to building your long-term wealth. Your future self will thank you. I hope you enjoyed today's video. Thanks for watching. If you're building a portfolio for passive income and financial freedom, don't forget to like, subscribe, and hit the bell notification so you never miss an update. Let me know which ETFs you own in your portfolio, and until next time, this is the Geordie Pig Investor, over and out.